the big tech stocks. Okay, let me do the big tech stocks. And if you want to ask the question again about that symbol, I'll look at it. But Apple. Okay. Now, a bunch of hieroglyphics in here from work for the site, but this is the way I see Apple. I think it's missing an up leg, a final up leg. So this consolidation off of 320 down to 300, I think is pretty much done. And in the next couple of days, as long as Apple stays above, say, 299.80, my sense is that Apple is going up. That this pullback is done. And then it'll come out of here and it'll go to a new high, and that will finish this up leg in Apple. And you'll have to get out of the way and let it correct. Maybe a serious correction down to 280, 270, and of course everybody would love to get it there again. And of course the major trend line in Apple is probably that 270 by then. So Apple, I think, as long as it stays above pretty much 300, I think it's okay. Gets below 300, this chart pattern gets much sloppier, and maybe this is a trap. So 300 to me is a big cutoff. Netflix. Netflix is a different can of worms here. Hasn't broken any major trend lines yet, but it's starting to act like it's tired. So here you have a new high, 185, 186, lower high in momentum. So this was the price action. This is the momentum action, not what you want to see. The high occurred on the update. The high in volume occurred actually it didn't. It occurred on the rally before the new high. So in effect, here's where here's where volume peaked. And in the new high, you had lower volume and lower momentum. So Netflix, I think, is a tired stock at the moment, and will fill this gap and test the trend line down at 158. That'll be interesting to see what happens if and when it does that. So if I condense it even more, so you can see kind of the French curve effect, this is the 200-day moving average. This is 107.5. So right now, 167 divided by 107 is the moving average is 50% below, 45% below the price structure. So when it gets kind of like this, one of two things has to happen. The price structure has to go sideways to allow the moving average to catch up, or the price has to come down to the moving average. Now, the last time you had such a divergence was here. Pretty much you had the moving average moving up towards a sideways congestion area. Now you've tacked on another up leg in Netflix. And the original up move was pretty much confirmed by momentum. Now you have divergences. So it tells me that there are major warning signals here in Netflix, and that be very careful on the long side. If you want to be short Netflix, well, at least now you have a prior high that has momentum problem. So, and that's much higher than where we are now, $18 or so. But at least you have a reason if you're, say, long puts in with a strike of 150, at least you have some sort of sense as to where you're wrong. And it's not an open-ended short position. And I'm not recommending a short position. I'm just saying that this massive bull move is tired, and it's going into a correction. Amazon is another one. One of the reasons on the site that I'm kind of schlepping around a small inverted ultra short QID position, the big, the horsemen, Apple, Amazon, Oracle, Netflix, they all look kind of tired to me. Look at the momentum, daily momentum in Amazon. It peaked here. This is where momentum peaked against this 262.5 or so. Amazon makes new highs. Momentum has a problem. Now you've rolled over. It looks to me like there's a pretty good case that we can make for Amazon finishing this leg from the most recent one from the July low. And where would it most likely go? Into the 153, 151 area. If that breaks, it's going to test the 200-day, which is at 132 and rising. So let's call it 137, 140. And it will have had a correction from 170 to 138, let's say. And here you have the major trend, which was down at 126. So Amazon's another one that kind of tired. And today I took myself out of Qualcomm at the end of the day. Earnings come out Wednesday. Qualcomm, if it opens higher tomorrow and takes off, I wouldn't be surprised. I thought it could probably go to 46, 47, and maybe I missed that. But it seems that it needs to do it really soon, because it looks like this will be the final upgrade. If it pulls back tomorrow, and I have the confidence that I can hold it, irrespective of the election and the Fed, I'll do it. But we all know that Qualcomm can be a scary chart, a scary ride, and especially around earnings. And I'm not advocating anybody stay in it for earnings, but if, in terms of the chart picture, this is a very, very, very integral channel that hasn't been broken. So as long as, say, 42.60 remains a viable pullback low in Qualcomm, I think that probably 46 to 47 is a viable upside target, and then I would get out of the way. And the way these things usually happen is after earnings, Oracle will be up 4%, and in aftermarket, my sense is that you should use that to your advantage if you're one Oracle. Okay.